Happy Friday, everyone. I am excited to have my personal expat tax guy, Alan Pfeister, back with us again. A few weeks ago, he went through, we had an hour-long discussion on everything U.S. citizens need to know if they are living in another country as far as filing their U.S. taxes. Because, like I said last time, you can escape the U.S., but you cannot escape the IRS. So we had people asking questions after that interview. And so we're back today with Alan answering the questions that you guys post. Now, I'm going to link below in the video description the original interview that we had. So if you didn't see that, make sure you go back and check it out. And other than that, we're going to get right into our questions this morning. Good morning, Alan. Are you ready for this?
Yeah, I think we've got some great questions here, so let's get to it.
All right, so I'll just read off the questions exactly as they were written to me on the I Go Panama Facebook group, which is a good time to stop and say, if you are not yet a member of the I Go Panama Facebook group, you are seriously missing out. We have over 17,000 people over there asking and answering questions about anything and everything Panama. If you want to move here, if you already live here, or if you just want to come here on vacation, it is the place to be for the best information up to date in Panama. So I'll link that below as well. All right, so question number one. I am a current California resident. Dun, 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 sounds familiar. And I am planning on moving to Panama in a year or two. You mentioned on your last video with Alan that I should cut all ties with California so that I am not expected to pay California state tax when I move. If I want to continue to have a bank account in the US, should I open one in another state? What did you do about a driver's license? Can you switch that to another state that does not have state taxes or just relinquish it in California?
Okay, great question. I get a load of questions about California residency. I know they just don't want to let people go out of their tax system. They just don't want to. And, I have some people who haven't lived in California for years, and they still want me to file a California income tax return for them every year, showing that they don't live there and they have no income. I let them know you don't need to do it, but the California Franchise Tax Board is very aggressive. So you can cut ties with California, and you don't need to establish them in another state. It could be anywhere else. It could be Panama. California is distinctly different in that it has a two-step process, and it doesn't seem like much of a difference, but for a legal distinction, it is. So number one, you have to cut ties with California. And number two, you have to establish ties somewhere else outside of California. And it doesn't seem like too much of a difference, but believe me, if you start getting in the details, it is. So what you want to do is just kind of sever all the ties that you can with California. And you want to start with that final part year tax return that you file the year that you move. You want to make sure that's done very carefully and very correctly. You also want to make sure you're prepared when you move. So any information that they can get easily about you that shows that you might be a resident, you want to try to sever. So if you can cancel your driver's license, that would be great, and get it in another state. It doesn't matter whether or not the state has an income tax or not. That's not relevant for this purpose. But there's some people who like to keep it just because they come back and travel, visit family or whatnot. So you can keep it. It's just you want to show as few ties to California as possible. So if it makes sense for you to keep it, you can keep it. If it's okay, in your situation to get rid of that driver's license, do it. But definitely get rid of your bank accounts. Just switch them over to another state, do a Capital One, online, 360, whatever it is. Close out those California bank accounts. It's an easy process to do. Cut some of those other main ties too. Like if you have a car registered there, try to get rid of that registration. They also look at if you own any property there that's used not for renting or for business. Voter registration, which could be a pretty tough one to give up. But again, what you want to do is make sure you cut as many ties as reasonable to California. You don't want to spend too much time there. You can go back and visit, but you want to be careful with how much time you spend there. But just try to cut as many ties as possible.
Absolutely. And being a former California resident, I'm going to just throw in my personal experience and kind of what I did as well. Bank accounts, I already banked at national banks. So I had a Wells Fargo account. I just went into the California branch and had them change my address to my address in Florida. So now I still have a Wells Fargo account, but it's not showing an address listed in California. So I didn't have to close an account or anything like that. So that was pretty easy. And that works if you have, banking that banks through multiple states. As far as driver's licenses, I did get rid of my California license. I no longer have a US driver's license. I don't need it. And I think people sometimes get a little confused. They're like, I go back to the States for, a couple months a year and I need to be able to drive. So I need a US driver's license. No, you don't. I go to Europe a couple months a year. I don't need a European driver's license. Why? Because I'm renting a car and I can rent it with my Panamanian driver's license. So if you're going there to drive, you can drive on your Panamanian driver's license. It's not an issue. So if you have that Panamanian license, you can cut all ties to your US driver's licenses if you're only there for a short amount of time. Like if you're spending half the year in the States, keep a driver's license. But shorter than that, you're just renting a car or something, you absolutely don't need it.
Yeah. Okay.
All right. Question number 2. Mine is even an odd situation in that I'm an American resident and I'm a Canadian citizen. I collect American Social Security. I collect my investment income from American investment money. Does that change the tax implications living out of the country and me being a Canadian citizen?
Okay, so I guess the question here is about, what changes once I move to Panama? It seems like this person right now is currently in the States. Well, when you're in the States, and if you're a citizen, a green card holder, or just living there, you have to file like any normal US citizen or any normal green card holder. But when you move outside of the States, then your situation changes. Instead, you file what's called a 1040 NR, NR meaning non-resident. And then what you include on that, instead of everything, all of your income everywhere around the world, once you leave the United States and you relinquish your green card or whatever, then you file that return only for income that you earn from the United States. So in this case, it would be the Social Security, it would be that investment interest. You need to file this form every year. However, you might not have to normally pay the flat 30% tax, depending on what country you're from. So the default tax rate is just a flat 30% on your dividends and your interest, and all of your income. You don't get any deductions for that kind of stuff. So in Canada, there are some benefits. I believe for Social Security, you can pay either 0% or 15%. For interest, it's usually 0% or 15%. Dividends is 15%. And there's a couple of small adjustments. If you trade stocks in an investment account and have capital gains, well, then the vast majority of non-residents don't pay any capital gains tax. But any US sourced income requires you then to file that tax return every year, including Social Security. And you can get Social Security no matter where you live and no matter what your nationality. Even if you decide to expatriate and move somewhere else, Social Security is yours, you won't lose it. But that's kind of the gist of it. So that's the main change in this case when you're not a US citizen and when you give up your green card or you no longer live in the States, you only file and report the income that you earn directly from the United States. And if you're in a country like Canada that has a great tax treaty, you're probably going to get a very reduced tax rate on any of that income you have to report.
Okay, perfect. That sounds great. Okay, number 3. Thank you. One of the questions Alan answered was mine, because we did answer some IGO Panama members, like prequel questions, I guess it would be, before we did our interview a couple of weeks ago. Yeah. We did form a corporation to buy our property, and it sounds like I definitely do not want to file the CFT form 5475 on my own. I most likely will be contacting Alan to do our taxes, as I recommend you do. Two related questions is, let's see, is my Panama bank interest income filed in the regular income section or on the FBAR or somewhere else entirely? And my second question is, my dad has a Panama pensionado status as a US citizen, is listed on my corporation board. Does he have to file the CFT on his taxes? That would be a big expense for him every year, I would guess. I'm happy to pay for a consultation if needed. All right.
Okay, yeah, consultation might be a good idea, but let me just go through and answer this question now, because there's some other facts behind this that could make a significant difference, but I can give a good general answer right now. So when it comes to bank interest, you would report that on your individual income tax return on Schedule B, along with all of your other interest. The FBAR is only for reporting financial accounts. FBAR stands for Foreign Bank Account Report, but the name is a little misleading because it includes all financial reports, including like investment or brokerage accounts and most pensions and etc. If you have to file a FATCA report, which is very similar to a foreign bank account report, FATCA report is the same, basically all of your bank accounts and investment accounts. It's almost exactly the same as having to file an FBAR, the same information, but just higher thresholds for when you have to, 10,000 versus maybe 200,000 for when you have to file the FATCA report. On that, then you do include the interest or any income that you earn from your foreign accounts on that first page, but you also have to include all of that income on your individual tax return as well.
Okay, that sounds good.
Okay.
Now her next question is actually something I hadn't thought about. Like my kids are listed on my corporation as officers.
Oh, okay.
So, I mean, since it's just one corporation, are you just having to file one of those 54, whatever they are, or does every single board member have to file one if they're a U.S. citizen?
Well, that's an interesting question. There's a tax attorney that I work with sometimes, a guy named Phil Hodgson out of Pasadena, California, and he says, if you don't have to give anybody a title in a corporation or a company, don't. Which can actually say, but I mean, then sometimes you have to list people as board members or officers.
Yeah, they require it here. You have to have a certain number of different board members here.
Yeah. Okay, so the answer is both yes and no, and let me explain. Okay, so there's different categories of filers for Form 5471, and what category you are dictates what schedules or how much you need to complete. You know, some people only need to complete a few things. Some people need to complete everything. Okay. One of those categories is called a Category 2 filer, and that is for any U.S. citizen that is an officer or director of a foreign corporation. Okay, and they have to fill out a Form 5471 every year if they know, or it would be easy for them to find out, if any U.S. citizen owned 10% or more of the corporation. Excuse me, not owns, but bought 10 percentage points or more of the corporation in any year. So that could be a U.S. citizen buying directly. It also includes if a U.S. citizen sets up a company that they own 100% of and then invest a corporation. So you know, you're not supposed to be able to hide behind companies in that sense. At least that's, you know, how the IRS thinks.
Right.
So that's any year where a U.S. citizen buys 10 percentage points or more. So if year one they buy 9%, you don't have to file that year. But if instead they bought 10% of the company in the first year, well, then you're supposed to report their ownership. And then if the next year they buy 11% and increase by 1 percentage point, you don't have to file. But if instead the ownership went up by 10 percentage points, so from 10% to 20% or more, then you have to file that again. So it's not an annual thing necessarily. Most of the requirements are like, if you have to file every year. This is one of the situations where it's only when a U.S. person buys 10 percentage points or more, or their ownership goes up by 10 percentage points or more. So it could be just 1 year only.
Okay.
So
Well,
they do have to file that form 5471. I think I know what you're getting at. So why did you
mhm.
say yes and no, Alan? What are you talking about?
Yeah.
All right, on the form 5471, if you file it, then there is an option for you to also report other people who need to file the form 5471. So you can include all of that information. That is, if you can get all their information. I'm sure you can get your kids' social security numbers and etc.
Right.
Sometimes you might not be able to get in for you don't have to do it. You don't have to file that form 5471 of yours with someone else's information. But some people, like this category 2 filer we're talking about, who's just an officer or director, they only need to, include a few things on there, which you would already include. So you can just list them on your return, file it, and they don't have to file anything, thankfully.
Perfect. Because like, for example, my kids, like the corporations that my husband and I own, we each have 50% of the shares. The kids just have a title just to be on the paperwork rather than paying an attorney to be on the paperwork. So they shouldn't have to file anything if I'm listing them as directors on my 5471.
Yeah, exactly. Right? And that would only be the year that basically the year that you bought 10% or more. So you both own it. So it'd be the first year. Later on down the road, if you take on new shareholders and you buy them back and ownership changes back and forth, they might have to file again, but it should be just that first year and probably done.
Perfect. All right, let's see. All right. If we set up a corporation to obtain the Friendly Nations visa, but dissolved the corporation less than 6 months later, should we still file the paperwork with the IRS that Alan mentioned? Back to that 5471, right? If so, are those documents found on the IRS website?
Okay. Anytime that you create or register a company outside of the United States, where a U.S. person can basically control it, and there's different legal definitions of what can control, but the simple definition would be you own more than 50%, right? There are other cases where it's less than 50%, but anytime that happens, you're going to have to file something, and you're probably going to have to file something every year. So even if you only open the corporation for 6 months or even 1 day, that's still going to result in a filing requirement. Now, there are some other options that you can do if there's hardly any activity in the corporation. And you can file what's called a dormant form 5471. It's a lot easier and it requires a lot less information. And there's some requirements. Anybody who wants to look this up, it's under Revenue Procedure 92-70. And just to kind of give you the general overview, there can't really be much going on in a corporation. So it has to have less than $100,000 in assets. So if you're using this to buy your property in Panama, yeah, it's probably going to be more than 100,000. So this might not apply to you. But you can't have any sales or expenses over $5,000 during the year, and the corporation can't make any dividends or any kind of distributions or payments or anything like that. And there's a couple of requirements, but if you, for example, started a corporation at the end of a one year to buy your property in Panama, and then you actually bought the property in the next year, well, that first year, since there was really nothing in the corporation, no assets over $100,000, you can file dormant. But the next year after that, you're going to have to file a full regular 5471.
Okay, now let me throw a twist into it. Okay, what if I open a corporation in November of 2022 and then I close it in, I don't know, March of 2023? Am I going to have to file twice?
Yes, yeah, 2 years. It's based on the calendar year.
Absolutely. All right. Next question. I purchased a condo in Panama. I created a foundation. Here we go back with the foundations to put the condo in the foundation. There is no economic activity. Is a requirement for a foundation to file any IRS form. And I guess that just goes back to that. I think it was the first question we had where it's going to kind of depend on whether it's acting as a corporation or as a trust, correct?
Yeah, absolutely. So there are going to be some filing requirements, and you want to make sure you get the right paperwork filed. For a corporation, it's a 5471. And you might not actually have to file a form 5471 in Panama if your corporation is a Sociedad Anónima, if I said that correctly.
An SA.
You have to file the form 5471. If it's any other type of company, then you can file an easier form and maybe a cheaper form. You might have to make a special, it could be a corporation, and you file an election to file one of these easier forms, unless it's that SA corporate. If it's an SA, then you're stuck. You have to do the 5471. If it's not, you can maybe file one of these easier forms.
That is amazing information, because when you open your corporation, you get a choice of things you want to call it. You can do SA, and I think I have one that's an SA, and I have one that's a INC.
Oh, okay.
Oh.
Well, well, now make sure with your Panamanian attorney that it makes sense to choose a different type of company before you just jump into it to save yourself
and just name it.
headache.
Okay.
Right. You know, there's more considerations to that. Like a lot of people in Mexico, they like to use corporations, even though it's a little bit of a problem for U.S. tax purposes. But there is that option. And if there's no activity, like I said, you might be able to file as a dormant 5471, which is a lot easier. But the question comes down to how is that company going to be treated, or that entity going to be treated? Is it going to be a corporation? Or if it's a trust, you have to file a form. Excuse me, sorry, it's pretty dry here. You have to file a form 3520 and a form 3520A. So generally the form 5471 for corporations is considered the hardest form. These 3520 forms are considered the second hardest. So how do you make that determination? You kind of have to look at maybe the formation documents. That's going to be your best bet. It might not be so clear. So then you would probably have to go based on, is this really a for-profit type business or not? Kind of make some decisions. It's not so easy. It's not so clear cut. But regardless, you do have something to file. And there are pretty heavy penalties for not filing these forms if required. For the 5471, it's $10,000 per corporation per year. For the 3520, also $10,000. For the 3528, also $10,000, so $20,000. And if you don't file these forms, the statute of limitations never start. So
exactly. And if that has you concerned, go back and watch that original interview we did. We did a lot of talking about all these different penalties that can add up. I mean, as you can see from the questions and the answers so far, there's not usually just a straightforward cut and dry answer. It's really going to depend on your specific individual situation as to what you need to do, which is why you need to get in contact with Alan, who rattles these form numbers and IRS regulation things off the top of his head. Like, I don't know what.
I do it all day, every day.
I've never seen such a thing. Okay, let's see. Our next question is, let's see, kind of the same, sort of. My wife and I got in under the old Friendly Nations visa just before the rules changed. So we have a Panamanian corporation, which is totally dormant. We do not live in Panama yet, but are permanent residents. Just want to confirm that I have heard in the video that we're responsible for filing a separate form with the U.S. government. We have no income in Panama. I'm a little worried. Would love to have the answer to this question. And let me step in as tax expert for a minute, and then you correct me if I'm wrong. Yes, they're going to have to file for that Panamanian corporation, even though they don't live here, correct?
Yeah, absolutely. Absolutely. And if they had the corporation open for a couple of years, the best option is probably a streamlined offshore voluntary disclosure filing. That's a great program that the IRS has now. In some, it lets you file for the past 3 years for your tax returns. They either, file your returns if you didn't, or to amend them to make corrections. In this case, you'd probably want to add that, the 5471s. Basically, you send the package to the IRS. If they approve it, they say, okay, no penalties. And if you had this issue going back more than 3 years and you needed to file returns or amended returns, don't worry about it. It's fine. So that's a really great program. It's been going on for a while. The IRS doesn't have to keep it open. Hopefully they will, because there's a lot of people who just don't know they're required to file all this stuff. So that would be one of the best options, I would say.
Absolutely. And again, we had a whole discussion about this in that prior interview, guys. So if you're interested in hearing more, make sure you click the link to the original interview that we did. We talked more about that. And again, I said it last time and I'll say it this time. Do not wait for the IRS to come find you. You get out ahead of them and make sure you're filing. I know, like this person said, I'm worried. Yeah, I get it. It's stressful, but don't let that stress just cause you to bury your head in the sand and just think that they're never going to hunt you down, because once they do, that's when it gets ugly. Just get caught up, get it done, and then you can sleep and not have to worry. All right. Our last question. Are you ready?
Yeah, let's hear it.
All right. In the video, there was discussion about corporations. See, this is a big thing here in Panama. What are the reporting requirements for a foundation in 2 situations? Number 1, the foundation has $0 in assets. And number 2, the foundation has only your property and your house. I guess that's going to go back to whether that foundation was set up more as a corporation or more as a trust, correct?
Yeah, absolutely. And unfortunately, that's not going to be easy to determine.
Right.
You don't want to have to file, both as a corporation and as a trust. That would be
right.
That would be too much. And if I had the choice, if I could choose, if I did this, I moved to Panama, I think I would rather go with a corporation, just because it's easier when you ultimately sell the property.
Okay.
But yeah, you have to look at the documents. If it's a corporation, again, you do have the potential option of filing as dormant, depending on probably just the value of the property. It's important to make sure you keep track of all the transactions that go back and forth between like you and your corporation, even though they're kind of the same, because you kind of have to report all of this stuff. So it seems a little bit funny, but in the IRS's eyes, their perspective is that this is a corporation, and therefore it's a for-profit enterprise. But it's not. You hold this property in this legal entity in Panama for asset protection. It's your home. You're not doing it for profit. You're doing it to protect yourself. But still you have to answer all the questions and prepare it in that regard. So you need to keep track of what, I don't know, property taxes paid, utilities, anything like that, and you have to report all of this on what's called Schedule M, transactions between the owner of the corporation and the corporation. That I would say is the most important thing to focus on. Just make sure you get your record straight, and again, just kind of like Mary said, don't let the IRS come and chase you, right? Because especially if there's a lot of long-term expats out there, everybody knows that there's just sort of this unreasonably negative connotations about American expats. For whatever reason it is, it's just this sort of a negative stigma, which doesn't make any sense. I've lived in a number of different countries. It's great. So if they catch you, they usually come in suspiciously. However, if you do come in voluntarily, under, like I said, the streamlined filing program, or you just file amended returns like you normally would, not under this program, you come forward, the IRS tends to be very understanding, not so tough. They tend to waive penalties. They tend to understand, because they know they have a lot of campaigns that they run trying to educate people about all these forms and all these reporting requirements. And in fact, if you open up your passport, it should say in there somewhere that you still have to file tax returns every year, most likely. And that was, part of the IRS's efforts. I mean, who goes through and reads that, right? But but the point is, if you come forward, they're going to be very lenient. If they catch you, then they'll come at you very strong, and then you really have to make the case that you didn't know and you're going to do the best, and etc. You don't want to be in that position. Just come forward before anything happens.
Absolutely. Okay, so like I said last time, there's a couple of different ways to get in touch with Alan. First is he does consultations, and the consultations are $300 an hour, but for most circumstances, especially if you get your ducks in a row, like, come on, guys, it's your finances. You need to kind of know what you've got and what's going on. Get your ducks in a row, set up a consultation with him, and chances are he can probably do it in 30 minutes or less and be like $150. Well, worth it. Like I said in the last interview, I did 2 different consultations with expat tax experts before I found Alan, paid $300 each to them, and did not get anywhere near the information that Alan gave me. So, and guys, I also want to state, I don't get anything out of doing this interview. I'm not promoting Alan because he's giving me a kickback on my taxes or hiding me from the IRS, except if he would hide me from the IRS, I'd promote him even heavier. None of that is happening. Okay, this is just me finding a professional, just like I did with Kramer Law, finding a professional that has done wonderful service for me, that I trust, that I just want to share with everyone else, and I'm not getting anything in return for it. But if you have any questions about your taxes, I highly suggest you contact Alan. If you don't need a consultation, but you know that you've got a corporation and you've got this income and blah, 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 put it all together and send it to him, and he will get your taxes done for you. Like I said last time, don't do that on April 13th. Start getting it together now. He's a very busy man. Get your tax stuff together early so he can get on it. You can get it out of your hair, be done with it, and go on about your year. Okay, Alan, do you have anything else to tell our viewers today?
No, thanks. I just being an expat myself, I live in a few different places, and if anything, I find that expats are the most friendly and most helpful people. It's been a few times, I came in as a newbie and people just kind of gave me the lay of the land, and I really appreciate that. That's why I like sharing some information. Yeah, please reach out to me, especially if you really want to do a deep dive and get some really good information. I'm glad to help.
Awesome. And I am going to link his email address below. And I'm going to repeat again, do not email him 50 times with 50 different questions expecting answers for free. If you have a complicated situation, you need a consultation. Okay, guys, if you've got a simple question like, boom, 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 I need this, that, and the other, can you do this? Go ahead and email him, but please don't drive him crazy. He's busy. Respect professionals' time. They charge for a reason. It's because they know a lot. Okay, that is it for today's video. I bet you we're going to see Alan next year about this time, and we will talk about all of these things again. Until then, get your tax stuff ready, get it done so you can enjoy beautiful Panama for the rest of the year without any worries about the IRS. Make sure you click subscribe, make sure you click notify, and do not forget to join that iGo Panama Facebook group, because like Alan was saying, there are a lot of friendly expats out there that are willing to help you with practically everything. And we have most of them over there on our iGo Panama Facebook group. All right, so until next Friday, have a great week.
Goodbye, everyone. Thank you.